Right now, there's a lot of conversation about should you buy gold or should you be buying silver? There's a little known subject, and that's the gold to silver ratio. And in this video here with Steve Penny, aka Silver Chartist, we're going to be discussing should you be buying gold, should you be buying silver, should you be investing in silver stocks, or should you be investing in gold stocks? And the little known gold to silver ratio. If you haven't yet, first of all, he has the best free newsletter really that I've truly ever seen. And I say that with all sincerity. And the link is right there down below. It's the Silver Chartist newsletter. It is the best newsletter. He gives you the stocks that he's buying, the stocks that he's selling, the stocks that he's trading. He breaks down everything happening in the financial markets as it pertains also to the mining stocks, gold mining stocks, silver mining stocks, and even uranium. It's free. It's right there down below. I also pinned it to the comments. And this is the greatest wealth transfer in human history, and we get to be involved in it. So make sure you check that out. Also, just want to give a shout out to our channel sponsor, which is Vizsla Silver. They've now changed their name. I don't know if you know Steve from Vizsla Resources to now Vizsla Silver. And so for everyone listening, hit the like button right over there. Give us a silver price prediction in the comments. And it's good to see you, Steve.
Yeah, good to be back with you, Jake. Always enjoy coming to chat with you, connect with your audience. So thanks for having me back.
All right. So we're going to be discussing silver here. Vizsla changed their name at the appropriate time too, as we're headed into some of the silver mania, and everyone's kind of starting to maybe get a little bit more interested in silver than before. It was always considered a poor man gold. And we're going to be talking about the gold to silver ratio. What the heck is it, and what does it have to do with your money, and how to really grow your money right now with your investments? So could you break that down for us?
Absolutely. Yeah. And I'll start from keeping it very simple, because I know we've always got a lot of new people entering these sectors who are perhaps just learning these things for the first time. So what the gold to silver ratio is simply is just the amount of ounces of silver that you would have to trade for an ounce of gold. Now, historically, going back thousands of years, really, that ratio is around 15 to 1. So you would have to trade 15 ounces of silver to get 1 ounce of gold. Back in March of 2020, that ratio reached an all-time extreme, as in never before seen in all of history, of roughly 130 ounces of silver to 1 ounce of gold. In other words, you would have to trade 130 ounces of silver to get 1 ounce of gold, and that made silver ridiculously cheap relative to gold, and gold itself is relatively cheap to almost everything else. Now that ratio has started to come back down. Silver has outperformed gold by a factor of almost 2 in the past 7-8 months. But it's still very cheap relative to gold. And that ratio currently sits at about 65 to 1, which is historically still very high. So there is much more opportunity in silver than there is gold. Although I should say, for the people that are new, silver does come with more volatility. It'll it's very volatile. It can go up and down. It can have very sharp pullbacks, as we've seen in the last couple of months here. But over the long term, I think silver will greatly outperform.
Yeah, when you said that, it made me think, and I want you to pull up the gold to silver ratio chart here, but it made me think about, I had never heard of it. And I started investing a sizable portion of my net worth into bullion, and I got lucky because my dealer that I ended up working with for most of my purchases, he told me not to buy gold. And this was silver was at 16, 17 bucks. And I guess so gold was maybe like, I don't know, 1,300, 1,400, 1,500, that type of range. And he was literally like, do not buy gold. And so I built at that cheap price a lot of silver, and it's amazing now looking back because it was near that type of ratio, and it almost doubled the amount of gold that technically I could trade it for. So could you break that down? And I guess also, as you show us the chart, where do you think that ratio could go?
Yeah, so why don't I pull up the chart? And as I'm pulling that up, that shows a really good dealer you had that would point that out to you. Because a lot of dealers won't do that. So,
super honest. Yeah, he's going to come on my channel actually, like next week.
Awesome. So you guys should be able to see, this is a long-term chart of the gold to silver ratio. This dates back to 1980. And if you can see right here, this peak in March went up to like 120 or close to 130 to 1. And back in 1980, this ratio bottomed at 15 to 1. And that's very common of bull markets. The same thing happened in roughly 1933, I believe. That ratio was, again, 15 to 1. And what's really interesting about this ratio, excuse me.
Whoa.
What's that?
I didn't realize it was that low and only in 1980.
Yeah, 15 to 1. And that happened in 1933 as well. But what's really interesting here is that global mine supply of silver versus gold is roughly 9 to 1. So in other words, there's 9 times more silver pulled out of the ground than gold each year. So you would think logically that the ratio would be closer to 9 to 1. And then on top of that, silver is consumed in industry. Silver is used in virtually every single electronic device out there, where gold, it really has very little, if any, industrial applications. So the supply of silver is being diminished. So I think, 15 to 1 is a very logical target in this bull market. But, you can make a case for even below 10 to 1. Now, what I plan to do right now, I hold roughly 95% silver, 5% gold. I've got a very high risk tolerance. I can handle the volatility, but I plan to swap silver for gold as that ratio compresses. And just doing that one thing and having a firm grasp of this chart can really amplify your gains in a precious metals bull market.
Give us an idea. So 2 questions. First, when you say 95% is in silver versus gold, that's including the total of your bullion as well as your mining stock investments?
No, when I said that, I'm speaking specifically of physical metal. So
Got it.
I'll just say I've got 1,000 ounces of silver for every 1 ounce of gold, whatever that comes out to.
And at what ratio do you personally find compelling in which you would consider trading some silver for gold?
Yep. And I've got a written plan, and I begin to gradually and slowly begin swapping some silver for gold once that ratio gets below 50 to 1. And for some context here, in the 2011 peak, that ratio came down to roughly 33 to 1. And I'll point it out on the chart here. So you can see that right there. That ratio came down to 33 to 1 in 2011. Wow. So I think we're going to at least see that. I mean, that's being conservative. So below 50 to 1 is when I'll gradually start swapping some silver for gold.
Yeah, I was talking to the CEO for Silver One Resources the other day. I don't know if you know him. His name's Greg. Mm-hmm. And Greg was telling me, we were talking about the production of silver. And another thing I find compelling, and the reason I said, wow, at 15 to 1 is because, and I understand where people say, hey, people are going to value gold over silver as a monetary metal. I understand that. People like Jim Rickards say that. Mm-hmm. But the problem here is there's a lot of above ground gold and there is not a lot of above ground silver. 70% or so, as you know, is consumed in industry and about 30% in retail. So then you say, well, what happens if this buying pressure from retail investors continues and the 30% goes to 40%? Meanwhile, the amount of silver that's needed in industry is going up and up and up. So what happens if that 70% goes to 80%? All of a sudden, you've got 20% that's not being met. And it starts to get pretty interesting. So do you feel like the industrial push, the green metal or the green renewable movement, now that we have the Democrats controlling, all branches of government and making resuming the strong renewable push that Obama was doing. And in addition, now we have everyone, GM, Ford, everyone doing electric cars. Do you think that do you think there could be a real supply crunch? There's been talked about this silver squeeze. Do you think so? And how would that affect the gold silver ratio? Could it be a black swan?
Absolutely. And you're exactly right. I do see some kind of infrastructure plan very likely in 2021, which will not only be inflationary, but will add industrial demand to commodities to include silver. But I think it's the investment demand that's really going to drive the speculative mania in silver. And there's a reason, like I like cryptocurrency. I don't personally own them, but I give a lot of credit to those investors who thought outside of the box or being rewarded for it. And I think there's a room for both. But what I would like the crypto people to see, and I know many of them do, is that many of the attributes that they see in Bitcoin specifically, there can only ever be 21 million, right? The same logic applies to silver. Roughly a 1 billion ounces is mined and recycled globally a year, 1 billion ounces. And then we're at $27 an ounce. That's a $27 billion market cap that's coming on globally. That is a minuscule market. And when speculators start seeking the investment into silver, I mean, there's just not enough for everyone to have, just like that logic goes for Bitcoin. And I'm saying all this because I think silver is going to do what Bitcoin did and what Bitcoin is doing. I think that's very likely. And we have a 6,000-year track record of seeing this exact thing happen.
Yeah, that's when you put it that way, it starts, especially when you get the push from if some of these big electronic and car manufacturers try to start taking a couple 100 million ounces off and building basically their own supply to make sure they can meet production over the next couple of years, barring a black swan. So where do you think this ratio could go? While we were talking, I actually did the calculation. I mean, look, you don't need to be a rocket scientist to know that the naked short selling in silver, and just the price is just a joke, the quote unquote price. But when you do the math, if that didn't if we just went to the 1980 with gold at 1850, that's like $123 an ounce, just if that ratio reversed. And the bizarre thing is that you would think it would already be reversed because silver is more important in our daily lives, far more, as you said earlier, than gold. So where do you think that this could go?
Well, so my personal plan is by the time we get to a 20-to-1 ratio, I plan to be roughly 90% gold. Now, I am keeping 10% of my physical metal and silver for even higher, lower ratio. And I think it's possible. I don't want to say likely, but maybe, 50-50 chance that we get to close to a 1-to-1 ratio or a 2-to-1 ratio, something like that, because silver is ripe for a mania. There's so many things in common that silver has in common with Bitcoin. And especially in this kind of economic environment we're in, where the average everyday person, it is very difficult for them to get ahead financially. So what are they forced to do? They're forced to go take on excessive risk and speculate. They're hopping in things like GameStop, cryptocurrencies, all these highly speculative assets, because that's their chance to get ahead. And when the market sets its eyes on silver, I think we can see a speculative mania that drives silver to prices that nobody can even imagine right now. And I think that day is coming, and probably sooner rather than later. Yeah,
same. I think that's why you and I are friends. So for everyone listening, right there down below, we have the Silver Chartist newsletter. It's free. It's right there down below. And the reason I say it is because my next question I think is really relevant to it, which is the other way to look at this is mining stocks, of course, have leverage to the price of silver. So it's kind of like the price of silver on steroids to the upside and to the downside. And so let's talk about how does the gold silver ratio affect mining stocks? And obviously this is your wheelhouse with the Silver Chartist newsletter. So break that down for us and for everyone listening. If you haven't, the link to get the free newsletter is right there down below in the description and comments.
Absolutely, yeah. And just knowing these ratios exist can really amplify your gains, as I said before. But, the average person is probably just going to go buy some physical gold and silver, maybe buy an ETF, and just set it and forget it for a couple of years. And that's totally fine. You'll do very well doing that. But just by putting a little bit more effort in and looking at these ratios, I mean, you can amplify those returns by multiple times. So one thing I look at is the gold to silver ratio. I also look at ratios of junior silver mining stocks versus junior gold mining stocks. And what we saw just a couple of weeks ago, junior silver miners had been extremely undervalued relative to their gold mining counterparts. And they just had a technical breakout about 2 weeks ago, and they're just starting to outperform their gold mining counterparts. And that ratio has a lot of room to run. So we expect silver miners to outperform gold miners going forward. But there will be a time to swap back into the gold miners. And we have a plan to do that as well.
So when you say that, then do you anticipate silver miners following a similar type of ratio as this gold to silver ratio here? Is it when we see 1980, the ratio reach 15-1 in an instance like that, or even if it just continues to move in that direction, even if it didn't get there, then do the mining stocks have even more leverage to that ratio?
Yes, absolutely, 100%. It's challenging to get data on because the ETFs don't go back to 1980, like SILJ is the junior silver mining ETF. That goes back to, I think, 2012. GDX goes back a little bit further. So it's hard to get this kind of historical data, but yeah, absolutely. We've got all kinds of data and ratios that we track.
And at what point would you begin to swapping silver miners for gold miners?
I don't recall the exact ratio. Perhaps I do plan to do a chart update for your members sometime next couple of days. I'll include that chart so I can give a more exact answer. But I think silver miners that day may come in the coming few months.
Where do you think the price of silver could get to in 2021?
My target is $50. And the reason I say that is that was the previous all-time high of silver, and silver tends to follow gold. So kind of what happens in the psychology of the average investor is gold moves first, and then it gets too expensive. People say, I don't have $2,000 for an ounce of gold. I'll look at silver. And then silver plays rapid catch up. And we started to see that in late 2020. And gold broke out to new all-time highs. Silver is still 50% below its previous all-time high. So I think silver is going to hit new all-time highs and follow gold in 2021.
Why do you think gold is not taking off yet? And when do you think the stimulus need to be passed first?
I think it's a combination of factors. Number one, I don't think the bankers are ready for it. I do think the bankers I don't think they're going to perpetually manipulate the metals, specifically silver. I think when they let it go, it's going to be to their advantage. And I don't think they're quite ready for it yet. We look at the Commitment of Traders report. You can look at the inventory that JP Morgan holds. So I think that's one thing that's been keeping a lid on both metals, gold and silver. But that day is going to come where that manipulation works to the opposite side, and it's a tailwind instead of a headwind. So I think that's one factor. The next thing would be, absolutely, the next stimulus package, which we expect to be passed in the next probably 4 to 6 weeks. And then I think there's going to be more stimulus later in 2021, probably in some kind of infrastructure bill, which will just be more fuel for this precious metals bull market.
So when you say you don't think that they're ready yet and that eventually you think they're going to let the price go, so you think that once they feel like they have their ducks in a row to make the most money off the move, then they'll just stop naked short selling it, basically?
I do, yeah. Yep. That's exactly what I think. And, I've mentioned before on your show, Jim Sinclair, who was very connected to these bankers and everything, in the 1970s bull run. He told me that personally back in 2013, and it's always stuck with me.
Expand on that a little bit in conclusion here.
Sure. So we can see right now in JP Morgan's warehouse, they're accumulating physical silver hand over fist. Meanwhile, they're shorting the paper market. So the manipulation is obvious, but we can see with our eyes that they are buying physical silver. And there's a saying that most people are familiar with: follow the money. And not just follow the money, follow the smart money. And JP Morgan's not stupid. They might be evil, but they're not stupid. So we see JP Morgan accumulating physical silver hand over fist. We see central banks buying physical gold hand over fist. We see wealthy investors buying the dips in the physical metal. Meanwhile, they're being told on financial media, mainstream media, it's a bubble. It's you don't want anything to do with silver or gold. So follow the money. They're doing the right thing, and we can profit just as well.
Okay, so one of the things that I've been thinking about as I've been kind of trying to consume some more of my own studies is this idea that I always thought, and I think to the layman, they may think the same way, maybe your average person that does not listen to this show might have just heard a little bit about this silver squeeze and the idea that the price is manipulated. But then when you get into it a little bit more, and what you just addressed as well, which is what they're actually doing is they're shorting the paper market, but they're long on the physical market. It's not just that they're manipulating the price down and like cashing out off of some shorts. They're actually using those crashes, especially on light volume days where there's not a lot of resistance, so that they can have, a 10% drop in the price. They're literally buying it at the same time when they're doing it. Is that what's happening, or was that what you think?
That's exactly what's happening. You nailed it. Exactly. When you go look at Kitco or wherever you check the silver price and the gold price, what you're seeing is the price based on the supply demand of paper contracts that can be issued at will by a few large banks. And that's the paper price set on the COMEX. And the extreme example of this was just last week during the silver squeeze that lasted from Thursday, I think January 28th through February 1st, that Monday. We saw in that 3-day period record retail buying of physical silver and also record wholesale buying of 1,000-ounce bars. So we have increased demand. I mean, the largest demand you've ever seen over a 3-day period. The supply hasn't, increased. So you've got a fixed supply, and then the price goes down. So it's obvious right there was the most blatant manipulation we've ever seen. And, the reason is because they weren't ready for the price to go yet. So they manipulate it. But the day is coming when the opposite will be true.
So then let me ask you as a final question here on this silver discussion. Do you think that there's a number in mind for the amount of ounces to consume? Is it to just basically keep doing it until it's nowhere? No one knows the answer, but when do you think, you say they're not ready for it to move yet? When do you think they will be ready?
Well, there's a simple answer and a complex answer. So the simple answer, and by the way, I don't have a specific answer, but there's two considerations here. Number one would just be like the financial incentives of JP Morgan and a couple other large banks when they're ready, when they've got the number of ounces that they deem necessary, or until the point where they don't feel that they can manipulate it anymore, because they cannot do this in perpetuity. The buying power of the general public is stronger than even JP Morgan. If we all continue to accumulate physical silver, you can overrun them, so to speak. So that's one consideration when they deem that they can no longer do this. But Jim Rickards has written for years that there could be more in-depth geopolitical considerations in play as well. For example, you might ask, why does China continue to buy up all our treasuries? Why would they do that? They know we're insolvent. They don't like us. Well, there's a theory out there proposed by Jim Rickards and others that, they will continue to buy our treasuries, and in exchange, we will continue to suppress the price of gold so that they can accumulate until they have enough gold to offset their eventual treasury losses. So that's another consideration for when this manipulation might end.
I have to be honest, I don't like that last one, not because I don't think that it might be right, because what it does is it shows you that this really is a global sellout of the American people to usher in China as a superpower. And that would mean, there's a lot more dirty things going on. I think I've never thought about that, but I think you might have something to that. I guess we'll know the actual answer to that sooner or later. And, I asked that as a for fun question, just to kind of have some entertaining speculation as to when they may move it. So for everyone listening, we're going to be moving on to part 2 of our discussion here, which is going to be about the currency collapse, but not in the way that you traditionally think. We're going to be talking about the invisible crash, when it might be coming, and it might be nothing that we've been conditioned to think it is. But first, if you haven't yet, be sure to sign up to Steve's free newsletter, which is right there down below, the Silver Chartist. I think when they let this thing run, baby, I think it's going, I think if gold is moving 3,000, those types of numbers, and we move back at the same time to this type of ratio, I think the price could amaze us at where silver goes. And if you want to prepare for this in mining stocks and in your physical holdings, I highly suggest that you start with Steve's free newsletter. I pitch it and I promote it because I really do think it's the best thing out there. I get DMs on Twitter all the time of people asking like, hey, I just heard this video where you guys talked about gold or silver. Where should I start? And I literally, in my DMs, I say just every time, go to my pinned comment, please sign up to my buddy Steve's free newsletter. Best one you'll find. That's where you have to start. Every single time I do that. So for everyone listening, if you haven't yet, please go ahead and sign up to that. If you haven't yet, hit the like button on the right side, hit the right like button. I almost said the right button. It would be right if you did hit the like button. You'll send it out to more people. Give us your price prediction right there down below, or your prediction on the gold to silver ratio in the comments right there down below. Thanks for joining, Steve.